Hi, my name is Ravi Dadlani and I'm a Senior Financial Planner and Independent Financial Advisor. I've worked within financial services since 2001 and recently been awarded a Top Rated Advisor 2020 due to the wonderful reviews that my wonderful clients have left me, and this was featured in the Times newspaper. By the end of this webinar, you should be able to understand how the state benefit system works with regards to statutory sick pay and employment support allowance, how much you would receive and for how long, and whether you would be eligible for state benefits. We'll also be discussing how your state pension may be affected by not working, as well as your private pension provisions. Firstly though, I would like you to think about how being ill and long-term sick will affect your own finances. How will you survive? How would you be able to pay your mortgage or your rent or other utilities? Netflix is pretty essential spending for most people these days, so how do you factor all of these expenses in? And therefore, how much do you think you would need on a monthly basis to be able to survive if you were long-term ill? The real question is, would you be able to survive on state benefits solely? There's no better time than now to review your finances and to see whether taking out private provision would be in your best interest. So should you be worried about being ill? Most of us don't even like to think that we're going to get ill. We always say, oh, we'll be fine, or someone else will be able to look after us and we don't need to worry about all this. But did you know that 2.8 million households are receiving some form of state benefit, which includes incapacity? Were you aware that every 2 minutes someone is diagnosed with cancer? Every 7 minutes someone has a heart attack. Add to this 10.8 million households, which is approximately 60% of the households in the UK, have stated that they would be unable to function if the main breadwinner was unable to work. Multiple sclerosis is also the most common disorder among young adults. It is possible for MS to occur at any stage, and symptoms first start showing themselves between the ages of 20 and 40. According to which, the consumer magazine, income protection insurance should be considered by every single adult, because no one knows how they will be feeling tomorrow or in a few years. You may be fit and healthy now, but can you assure that will be the case in years to come? At the end of this webinar, I'm going to give you the opportunity to contact me for a free, non-obligation quote to protect your income against long-term illness or bad health. So now let's move to what would happen if you were ill. If you're employed, most employers offer some form of sick pay. It may be 1 month, 3 months or 6 months, or in some cases a lot greater. However, if you do not receive any sick pay benefits from work, then you would be eligible for Statutory Sick Pay, also known as SSP, followed by Employment Support Allowance if you're still unable to work. Statutory sick pay is paid for up to 28 weeks at a rate of £95.85p per week. If you're self-employed, then you will not be eligible for statutory sick pay and hence you would need to claim for employment support allowance. To be eligible for employment support allowance, which is the new style, or ESA, you would need to be employed or self-employed for the last 2 to 3 years and have sufficient national insurance contribution history. For employment support allowance, for the first 13 weeks, which is generally the assessment period, you would receive £74.35p per week. This is whilst your claim is being assessed. Once your claim has been assessed, you would be placed into 2 groups, either the work-related group or the support group. If you are placed in a work-related activity group, then you would receive £74.35p per week. However, if you're too ill to work and have been assessed as too ill to work, you would receive up to £113.55p per week. New style contribution employment support allowance is paid for a maximum of 365 days, whereas if you're placed into the support group, then this will be paid to you until your state pension. One key thing to note is if you are placed in the work-related group, then you have been assessed as someone that can work in the future or is able to work. This could mean that you may be forced to work in any occupation. So think about this. You're a professional, skilled worker, and all of a sudden you've been told that, okay, well, you can't do your job that you've trained all your life for, but you can do something else, less skilled. How would you feel? A key benefit, however, of claiming for state benefits and employment support allowance is that you accumulate national insurance contributions credits towards your state pension. So if you're off ill for 2 years and you're receiving ESA, well, then you've got 2 years of national insurance credits towards your state pension. This is invaluable. And if you are ill and unable to work, what about your pension? We know that at the moment, all employees have access to a workplace pension scheme that they and their employer contribute to. If you're not working, where are these contributions going to come from? How will you be able to retire comfortably and on an income level that you desire? So ask yourself, if you were long-term ill, would you be able to survive on the state benefits that are provided? Would you be able to pay your mortgage, your rent, your essentials, your Netflix, your Sky, your mobile, your broadband? Even if you are assessed as someone that should be in the support group, then you would only still receive just under £500 a month. How will you be able to afford most of the things that you're probably used to having? If you've been placed in a work-related group, it means that you have been assessed as someone that can do any occupation. However, if you take out an income protection policy, you could request that the benefit should be paid out if you cannot do your own occupation, rather than having to do potentially a less skilled job. This is one of the options that you can take out when you take out an income protection policy. So are you ready to call me to ask me to provide you with a quote that if you were unable to work due to a long-term illness or disability in your own occupation, that a level of income would be provided to you? Would you like me to tell you how much that would cost you on a monthly basis? If so, please do get in touch. Within this video, at the bottom, there will be a link to our website, and on that you'll be able to find a contact us button, either via calling us on a phone, on a landline, or an email. What I need from you are the following details on this email or on our call. I need to know you're Mr. and Mrs. Miss, your first name, your surname, your sex, whether you smoke or not, your date of birth, your occupation, and whether you think you're in good health. I also need to know how much per month you need or would need if you were long-term sick. Generally, insurance companies would protect to a maximum of 60 to 70% of your current earnings. I also need to know how much do you earn on an annual basis. Also, how long do you need this cover to last for? So do you want the cover to last until a certain age, maybe 55, 60, or in line with your state pension age, 66, 67, 68? One thing I always explain to my clients is that they should have an emergency savings fund. This is equivalent to 3 months of your expenditure. This money should be held on a cash savings account. So if you do have 3 months expenditure, or perhaps you get paid 6 months from your employer, then we could look at a deferral period of that time. So you would not need to receive anything from the income protection policy until a set period. So let me know how long you can afford not to have an income, because that will reduce the policy premium. And finally, we generally recommend that these policies should at least increase with inflation. So that's to say that if you need £2,000 today, If you still have that £2,000 fixed and you need to claim on it in 10 years, well, £2,000 will not be worth £2,000 in 10 years' time. But if you inflation link it, then that £2,000 today will be the equivalent of £2,000 if and when you need to claim on it. So those were the do's and the don'ts. It's quite simple. Don't waste your time and your money figuring this out. Let me help you. I hope you've enjoyed this, and if you have any questions or comments, please feel free to contact me or leave your comments. Thanks very much for listening.